You ever wonder what the playbook of a top-performing fund manager actually looks like? You know, how they manage to consistently beat the market? Well, today we're going to pull back the curtain on one of the best small-cap growth funds out there. We're going to dissect their strategy, look at the exact stocks they're buying right now, and boil their winning formula down into a framework you can really think about. So let's get into it.
So here's how we'll break it down. First, we'll look at the big picture, why small-cap stocks are suddenly back on everyone's radar. Then we'll dive into the specifics of a winning playbook from a top fund. After that, we'll see that strategy in action with 4 specific companies they're buying now, and finally, we'll wrap it all up with the key takeaways for you.
All right, so for years, small-cap stocks have pretty much been the underdogs to the market. I mean, they've been consistently trailing their large-cap cousins. But, the winds might finally be changing, setting the stage for what could be a major, major turnaround story.
And that is the multi-billion-dollar question, isn't it? An 8-year losing streak. That's the longest on record against large caps. So this isn't just some minor slump. We're talking about a historically tough run. So what's different now? Why are savvy investors suddenly paying very close attention?
Okay, and this is where the story gets really interesting. On the one hand, you've got this historic slump that has pushed small-cap valuations down to their lowest levels in over 2 decades. But on the other hand, you've got 2 powerful catalysts just starting to emerge. The possibility of the Fed cutting interest rates, which, lowers borrowing costs for these smaller companies, and forecasts that their earnings growth is about to start outpacing large caps. It's a classic setup for a potential rebound.
So what's really at stake here? Well, when small caps do reclaim leadership, they don't just kind of squeak by the large caps. History shows they can absolutely explode out of the gate. According to Jefferies, they outperformed by a whopping 27% on average in that first year alone. And given how low valuations are today, some analysts think the next rebound could be even more powerful.
So, if a small-cap comeback really is on the horizon, the big question is, how do you find the winners? Well, for that, we're going to turn to an expert, Brandon Nelson. He's the portfolio manager of the Calamos Timpani Small Cap Growth Fund, and he has a proven playbook for doing just that.
And hey, the numbers really speak for themselves here. Over the past year, the fund is up at nearly 38%. That's almost double the return of its benchmark index. And this isn't just a one-year flash in the pan either. This fund has consistently beaten its peers and the index over the last decade, proving this strategy has some serious staying power.
So what's the secret sauce? Well, Nelson calls his strategy fundamental momentum. It's not about chasing hype or jumping on bandwagons. It's a very specific, disciplined process for finding companies whose underlying business is not just strong, but getting stronger. And, this is crucial, whose potential isn't fully priced in by the rest of the market yet.
And look, this isn't some vague feeling. It's a concrete checklist. The numbers have to be there. At least 10% revenue growth and 15% earnings growth. But that growth has to have quality. It's got to be sustainable over several quarters with profit margins going up, not down. And the final piece is the edge. He's hunting for companies that consistently beat expectations but are still somehow flying under the radar.
But here's the other side of the coin, and it's just as important. Nelson's a realist. He knows these high-growth stocks come with super high expectations. So if that momentum stalls, if the growth story changes even a little bit, he is absolutely ruthless about cutting the position and moving on. This strict sell discipline is key. It's a non-negotiable for managing risk in the space.
All right, so that's the theory. Now let's see how it actually works in the real world. We're going to look at 4 companies the fund is holding right now, and each one of them perfectly illustrates a different part of this fundamental momentum strategy.
Okay, first up, we have Dave Inc. It's a digital bank. The idea here is really simple. Without the massive overhead of physical branches, its cost structure is way lower than traditional banks. This creates a highly scalable model. And the momentum? It's undeniable. The company just raised its guidance for next year and is so confident in its cash flow that it's actually buying back its own stock. And this is what makes the model so powerful. That number, 115%, that's the forecasted growth in profitability. Because their costs are so low, just a little bit of extra revenue creates a massive jump in profit. This is something called operating leverage, and it's a core trait Nelson looks for, where every new dollar of sales has this outsized impact on the bottom line. It's huge. Next is NPK International. Now this one is pretty interesting because it has a dual catalyst story going on. First, its core business is just booming. They make these heavy-duty mats for industrial sites, and with all the massive power grid upgrades needed for AI, their utility customers are buying more than ever.
But second, the stock is about to be reclassified from the oil services sector to industrials, which typically get a higher valuation. So you've got a business tailwind and a valuation catalyst happening at the exact same time.
Now let's look at a tech play, SimTime. They make these incredibly precise timing devices that are absolutely essential for electronics, especially in data centers. As the world builds out more and more infrastructure for AI, demand for their chips just goes through the roof. With strong revenue growth and expanding margins, it's a classic fundamental momentum story. And Nelson's conviction here is really high. He calls it one of the best long-term growth stories in the entire semiconductor industry.
And finally, here's an example that shows the strategy can be flexible. Lens Therapeutics isn't profitable yet, which, would normally disqualify it from the list. But it has a crystal clear roadmap to growth. It just got FDA approval for its eye drops for farsightedness and is launching the product next month. So when you have a massive, imminent catalyst like a product launch, the rule about current profitability, well, it can be bent a little.
Okay, so we've seen the big picture, and we've looked at the specific stocks. Now let's zoom back out and boil this all down into a framework. What are the core lessons from this winning playbook that we can maybe apply to our own thinking?
It really all comes down to this four-step framework. First, you start with the numbers, screen for real, measurable growth. Then, step 2, you verify the quality of that growth. Make sure it's sustainable and that it's profitable. From there, step 3, you have to find your edge by focusing on companies the market hasn't fully appreciated yet. But that final step, step 4, is what holds it all together. Discipline. You have to have a plan to sell and the conviction to actually stick to it. At the end of the day, this fund's success isn't an accident. It's the result of a repeatable process built on clear rules and unwavering discipline. And seeing a playbook that's this clear, well, it kind of forces us to ask a question of ourselves. What are the rules that govern our own investment decisions? What's our playbook?